Hello, everybody, and welcome to the Dash Trader Newsroom. Will the Fed cut rates in September? That's what's on everybody's mind, traders and investors alike. My name is Michael DeGioia, and I'm joined by my co-host, Jill Molandrino, Global Markets Reporter at NASDAQ. Jill, how you doing?
Good, doing well, Mike. Thanks for having me again.
Good. Yeah, so everybody's been talking about, whether or not the Fed is going to cut rates in September. Now it's a 100% chance factored in, according to this moment. We have factored in a 25 basis point cut. Fed chairman's in Jackson Hole. What are you hearing about what's going to go on in September and what Fed Chairman Powell is going to say in Jackson Hole?
Well, I think what the market is focused on, at least for the end of this week, is FOMC minutes and, of course, the Jackson Hole Symposium. Those are going to be the two most important events because they will provide clues, hopefully, about the Fed's future plans and policy outlook. The question that I think participants need to be asking themselves is this already priced in the potential for rate cuts? And that's what I think the concern is and what that outcome is going to be. If the market doesn't get what it expects, does it, do we see volatility come back into the market? For that reason, if the market does get what it expects, then you have to ask, has that been priced in? And then it's a sell the news kind of event. I think in addition to that, we have key earnings coming out of NVIDIA next week. Even though it's one company, its tentacles reach into so many different other areas of the market because of the AI narrative. So the next 2 weeks, even though it's the end of August and the desks tend to be a little bit more thin, the headlines will certainly be impactful to the market. And as we know, when it's a little bit more thin, volatility can increase a bit and it could be more whipsaw-ish. So I really think trying to interpret Fed projections and how they're interpreting economic data is going to be key. I think, the data is still good. It's not as if there is, this rushed cut multiple times, perhaps 25 basis points, perhaps 50 basis points. But I think anything more than that, if data, trajectory remains the same, I think that's the way the market is thinking.
You don't think that there'll be any, questions or, that the public would consider a September rate cut so close to an election as a political move, or it's just, you think that's just reaching for straws?
I don't think it will be perceived as a political move. In theory, the Fed should be apolitical. They are concerned with their mandates in terms of labor and the strength of the economy and what that data is telling them. And the same token, the Fed shouldn't be concerned with the way the market is moving either. Just because the market wants rate cuts doesn't mean that that's the Fed's mandate. The economy is very different than the market. It's one thing that we've learned since, the moment that we've wanted to get into finance, right? They're two very different animals. And at the end of the day, you have to kind of play 4D chess with this, Mike. Should we get a rate cut? Does that give ammunition, depending on what side of the fence you are politically, that there is concerns about the economy? So just because we get the rate cuts, because that's what the market wants, could that be twisted into signaling that there are some trouble that's coming up in the economy? So it can be perceived either way. The way I take it is I would be more concerned about cracks starting to show in the economy versus a 25 basis point cut just to satisfy the markets. It's not going to move the needle in that respect. When we saw that pocket of volatility on Monday, August 5th, and there were people out there calling for emergency rate cuts, to me, that would have been the big surprise, not necessarily the yen unwind trade. To get rate cuts in between the meetings, that would have signaled that there's real fear in the system.
Yeah, I totally agree. I think that would have been overreacting. And certainly, we've all been waiting for a Fed rate cut for months and months and months. We've been hearing about this for almost 9 months. So to finally get one in September would seem to be in line. Needless to say, let's jump into the overall summary of earnings season. From what I've been seeing, it's pretty much good on revenue, but bad on forward guidance. And there has been a little bit of ugliness in terms of closing stores and things of that nature for like Macy's and whatnot. GM as well. They think they laid off about 1,000 people recently, or announced a small layoff. What are your thoughts overall on earnings season?
So it's interesting, Mike, with retail in particular, it's always going to be a tale of the haves and the have-nots. The discounters, as an example. I mean, TJ Maxx, I can't remember the last time that they had a really bad earnings report, or I can't, at least in the near future. The discounters, they are continuing to do well. Walmart, Target, they have found the sweet spot as
Burlington
well,
Coat
not just in
Factory
terms.
is everywhere. Yep, they've been opening up everywhere. Burlington Coat Factory.
Right.
TMX.
So the discounters are doing well. Walmart and Target had done better than expected, and not only just because of the consumer demographic, but they have, Walmart in particular has done a really good job in terms of leveraging technologies like AI is an example for better retail management. And those predictive technologies will help to keep those costs in line. And that hard data also helps them understand consumer trends. Macy's, not a surprise. I don't remember the last time I was in a department store. It does not have the younger demographic. If you look at all the majors, like when I was working in the mall in the 90s, the majors like a Lord & Taylor, a Neiman, a Macy's, a Sears, those were the anchors, are called anchors in the mall. Now they're either Walmarts or gyms or something that's lifestyle oriented. So there's just a massive demographic shift. It isn't, I don't want to say idiosyncratic to Macy's. It's the department store subsector in general. And I think the consumer performed better than many had expected. My concern with earnings season is the earnings beats were solid, right? Revenue came in line, and that's what is a bit concerning, that perhaps growth is slowing. It doesn't mean that growth is, negative. It just means that it's slowing. Other than that, the companies that have performed well and have done decent with forward guidance, they're operating in what's been, a challenging higher interest rate environment. That's where diversity of experience on the board, in the C-suite and senior leadership, that is, that's kind of how, you separate among the different levels in terms of solid management teams. So it wasn't quite as bad as I think some had anticipated with the strength of the consumer, but there's going to be a lot of uncertainty, particularly when we think about policy and so forth going forward. So I wouldn't overly celebrate until we get some more clarity.
I think you made a great point in pointing out that it's mainly the department store sector and not retail overall. I think that consumer habits, consumer interests have changed. Consumers are more interested in certain brand names rather than going to a department store and saying, oh, I shop at Macy's, as they may have done in the past. So I think that's a great differentiation in terms of the softness in retail. Last but not least, obviously we are homing in on the election. I think we're like 75 days out. We're coming closer and closer to the election. Your thoughts as the election gets closer? What will market volatility? I mean, obviously market volatility will heat up, but in how have you seen this in the past? And will the election end the volatility? Because my opinion is no. I think the volatility will continue after the election as you choose the cabinet, as you make other political decisions.
Yeah. Mike, honestly, it's really hard to discern at this point because there really hasn't been a clear path in terms of policy. I think when just anecdotally, I think people are just exhausted by the lack of policy and framework, and just exhausted from the name calling and misinformation that's put out there. It's exhausting. It's not helping either party, and I think we also have to recognize that a lot of times things that are campaigned on and the sound bites and, potential policies that are presented, it doesn't necessarily mean that those are executed in the same way as what actually happens when an administration gets put into place. I mean, that's not just particular to recent times. It's kind of how, it's always been. Campaigning is different than actual policy that's put into place. I also think you also have to think about the transactional nature of policymaking, and I think it's more of a social thing than anything else. And to your point, and it also depends on election results. If it's not a clear-cut win on either side, it could be quite some time till we understand what the administration is going to look like.
Yeah, without a doubt. I mean, we've certainly seen in recent past a couple of elections not decided until December, going back to the I guess it was the George Bush and election back a number of years ago. But also, we also saw obviously all the uncertainty over the last election. So this is an unusual election because we had an incumbent president who, we had a change in candidacy, midstream, and then still it seems to be an election based on personality rather than policy. So I think that based on those factors, we're probably going to see extra market volatility related to this election as things continue to get closer. Your thoughts, or do you want to wrap it up there?
I agree with you. You know, Mike, to your point, in years past, there hasn't been much of an impact on election cycles. Again, this is a very different environment. Certainly social media and, the opportunity for everyone to have a platform and echo chambers and how algorithms influence a lot of thinking and misinformation, disinformation, fakes, and so forth. It's changing the election environment in general. And I think when you put that narrative out there that it's fake news or the election, was fraud, and it's already put in someone's head, it's almost like it just changes the dynamics of our electoral system. And I think that is the biggest concern, more so than anything else. So to your point, I honestly don't know how the markets are going to discern this until we understand which administration, when, and how, the transfer of power takes place.
Absolutely. Well, thank you very much, Jill, and I will see you
You got
soon.
it.
All right. Thank you so much as always.
See ya.
All right. Take it easy. I'm going to jump to my dash trader. We've had a pretty strong recovery. Up 1, 2, 3, 4, 5 days. Little sell off 1, 2, 3, 4, 5 days. We had a gap up today and then a pretty steep sell off. The question is whether or not that selling will continue, but we've had a pretty nice recovery thus far. Let's take a look. SPY. The S&P, certainly, we had a sell-off, complete dip, rally almost to the top, but failed to make a higher high. Let's take a look at the QQQ. QQQ, a little bit more negative than the S&P, meaning that the QQQ, we had a sell-off, rally, shoulder, equal shoulder. So we've pretty much made what's called a V pivot on both the QQQ and certainly in the SPY. I would say the SPY came all the way up to market highs, but made a slightly lower high. That would be considered as bearish. Now, usually the sell-off, because price is above the moving averages, if we were to sell, we would sell down into the 544 price level. And then we would probably chop around a little bit before we had any additional selling. So you probably make a drop and then chop up and then potentially another drop if we don't automatically go back up. But there is certainly some signs that we have some bearishness. Now, the important thing is that we pushed right through the weak left shoulder of this head and shoulders. The shoulder, a head, and then the weak right shoulder. We had the big sell-off. We've had the complete recovery. And now we put in what's considered an outside bar, which is a bearish pattern here at the prior high. Last but not least, let's do the DIA. DIA, we have a triple top on the DIA, that DIA, which represents the Dow Jones Industrial Average. So we have a triple top, and potentially we will get some further selling. We also have, let's take a look at MSFT. MSFT. So Microsoft, remember that Microsoft had that CrowdStrike outage. Microsoft was a little bit more bearish than the other indexes, right? It was more bearish than the other tech sector because it kind of triggered, it was involved in the catalyst event that started the sell-off. That happened around here. That was when CrowdStrike happened, and it had already had what looks like a head and shoulders. Now, other stocks like AAPL, Apple certainly showing a strong recovery. I mean, all green bars after the sell-off. It looked like that was a great buying opportunity. You got a discounted price down to 196, 195. That immediately snapped back up to 225. So needless to say, certainly not across all technology companies. Now, the big one to watch is NVDA, NVIDIA. Okay, so we got NVIDIA up here. Just everything's going slow today. But you could see here, we've had a beautiful run up into NVIDIA earnings. And then certainly we had a big red bar, which is, completely in line with what happened in the market today on, this is Thursday, the 22nd. So certainly I would keep an eye on NVIDIA. Now, the big one that's interesting to me, and probably it's breaking out and going higher. Hopefully my chart works. There you go. There is gold. Gold is breaking out to all-time highs and looks like it's starting in a new, fresh uptrend in a breakout area. So let's go back. All right, so we just finished our market analysis section. Just bringing to everybody's attention, we're going to be doing another live DAS training session at the NASDAQ market site, and we have a special code for you to save $100. It's SOCIAL, SOCIAL 100. This is on September 23rd, Monday. We'll be doing a live day of training on DAS Trader at the NASDAQ market site. Space is extremely limited, so if you're going to sign up and you want to go to the closing bell at the NASDAQ, this is a great way for you to learn about DAS and to certainly experience the NASDAQ closing bell. It's a great life experience event. Certainly, the schedule is going to be like this. Starts at 8:30, light breakfast, setup, meet and greet. We're going to create a DAS Pro layout focused on several trading styles: scalping, gap trading, intraday trading, swing trading, options, and many more. We will also be setting up hotkeys using the script editor, configuring the trade signal feature on the software, as well as going through some other advanced features. At 1 p.m. we're gonna go out for lunch. We're gonna meet up with some of our #1 best trader winners, and then we're gonna go on to the NASDAQ closing bell ceremony. Stay up to date with all things DAS by going to our website, www.dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, and the DAS Newsroom reminders. Certainly check us out on LinkedIn, Twitter, Facebook, and Instagram. Thank you so much for joining me yet again on the DAS Newsroom. See you next time.